A powerful pitch deck can open doors, attract investors, secure partnerships, win customers, and create opportunities that can completely change the future of a business. In this pitch deck presentation masterclass, you will learn everything you need to know about creating a professional, investor-ready pitch deck from start to finish. A pitch deck is much more than a collection of slides. It is a communication tool designed to convince investors, lenders, partners, customers, or stakeholders that your business deserves attention and support. Many entrepreneurs believe that a pitch deck is primarily about design, but successful pitch decks are built on clarity, structure, and persuasion. Before creating a single slide, understand the purpose of your presentation. Every slide should answer a question that an investor is already thinking about. The first objective is to capture attention immediately. Strong openings often begin with a surprising fact, a major industry problem, a market shift, or a powerful customer pain point. After grabbing attention, clearly explain the problem your business solves. Avoid vague descriptions. Define who experiences the problem, how often it occurs, why existing solutions are inadequate, and what consequences result from leaving the problem unsolved. Once the problem is clear, introduce your solution in simple language. Investors should understand your business within seconds, not minutes. Explain what your product or service does, how it works, and why it is different. A good pitch deck also demonstrates timing. Show why this opportunity matters right now by discussing technological changes, consumer behavior shifts, regulatory developments, economic trends, or industry transformations. Market opportunity is another critical element. Present the total market size, the segment you are targeting, and the realistic share you expect to capture. Investors look for businesses that can scale beyond local success. Include customer profiles, purchasing behavior, key demographics, and industry demand indicators. Explain your value proposition clearly. Describe the specific benefits customers receive, such as saving time, reducing costs, increasing revenue, improving convenience, enhancing safety, or solving a recurring frustration. Throughout the presentation, focus on simplicity. Avoid technical jargon, complicated diagrams, and unnecessary details. Every slide should move the story forward and strengthen confidence in your business opportunity. One of the most important sections of any pitch deck is demonstrating how the business actually operates and generates value. Investors are not only interested in a great idea, they want to understand the system behind the idea. Start by explaining your business model in a straightforward manner. Show how the company makes money, who pays for the product or service, how frequently purchases occur, and whether revenue comes from subscriptions, one-time sales, licensing, consulting, advertising, commissions, memberships, or recurring contracts. Explain customer acquisition in detail. Describe how potential customers discover your business through search engines, social media, referrals, partnerships, content marketing, paid advertising, industry events, email campaigns, influencers, direct sales outreach, or distribution networks. Demonstrate how leads become paying customers. Discuss your sales process and the key steps required to close a deal. Include information about customer onboarding, retention strategies, support systems, and long-term customer relationships. Investors value businesses that can retain customers because retention often improves profitability. Explain customer lifetime value, repeat purchases, renewal rates, and customer satisfaction initiatives. Introduce any competitive advantages that protect your business from competitors. These advantages may include specialized knowledge, proprietary technology, exclusive partnerships, unique processes, strong branding, patents, trademarks, superior customer service, network effects, community loyalty, or operational efficiency. Competitive analysis should be realistic rather than emotional. Acknowledge competitors and explain how your business differentiates itself. Discuss industry positioning and market gaps that your company addresses. If possible, demonstrate validation through pilot programs, early sales, customer feedback, waiting lists, pre-orders, partnerships, testimonials, case studies, or successful product launches. Validation reduces perceived risk and increases investor confidence. Explain your pricing strategy and the logic behind it. Show how pricing aligns with customer value while remaining competitive. Include operational details such as suppliers, manufacturing processes, fulfillment systems, logistics, software infrastructure, or service delivery methods. Investors want evidence that the business can function efficiently as it grows. A strong business model section transforms an interesting concept into a credible commercial opportunity. Traction is often the section that separates a promising startup from a business that investors take seriously. Traction proves that people are already responding positively to your product, service, or business model. Even if your company is still in its early stages, there are many ways to demonstrate progress. Start by presenting measurable achievements such as customer growth, revenue growth, user registrations, active users, subscription renewals, repeat purchases, pilot program results, product launches, partnership agreements, distribution deals, website traffic increases, app downloads, social media engagement, referral activity, email subscriber growth, or customer testimonials. Investors want evidence that the market is validating your idea. Explain how your key performance indicators have improved over time. Show trends rather than isolated numbers because trends demonstrate momentum. If revenue is growing, explain the factors driving growth. If customer acquisition costs are decreasing, explain why your marketing process is becoming more efficient. If customer retention is improving, describe the strategies that contributed to that improvement. A strong traction slide should also highlight milestones already achieved. These milestones may include completing product development, securing regulatory approvals, launching a beta version, entering new markets, hiring key team members, acquiring strategic customers, improving product features, reducing operating costs, or establishing important partnerships. Investors appreciate founders who execute consistently and achieve measurable objectives. Another critical component is financial performance. Present revenue, gross profit, operating expenses, cash position, profit margins, customer acquisition costs, customer lifetime value, average transaction value, and other relevant metrics. Keep financial information simple and easy to understand. Investors often review hundreds of presentations, so clarity matters. If your company is pre-revenue, focus on user growth, customer demand, wait lists, engagement metrics, product testing results, or letters of intent from potential customers. Demonstrate that real people want what you are building. Every traction metric should support the broader story, that your business is moving in the right direction, reducing risk, creating value, and building a foundation for future growth. Strong traction provides credibility, confidence, and proof that execution is already happening, not just being planned. A great pitch deck must also convince investors that the business has a realistic path toward growth and long-term success. This is where market strategy, expansion plans, and future opportunities become extremely important. Begin by explaining your go-to-market strategy in detail. Describe how you plan to reach customers efficiently and consistently. This may involve content marketing, search engine optimization, social media campaigns, referral programs, affiliate partnerships, strategic alliances, direct sales teams, channel partners, distributors, industry events, webinars, public relations, community building, influencer collaborations, or account-based marketing. Explain why your chosen strategy matches your target audience. Different customers respond to different marketing channels, and investors want to see thoughtful decision-making. Discuss customer segmentation and explain which customer groups you will target first. Many successful businesses begin with a narrow market before expanding into larger segments. Show how your business can move from early adopters to mainstream customers. Scalability is another major factor investors evaluate. Explain how revenue can grow faster than expenses over time. Discuss automation, technology systems, standard operating procedures, self-service platforms, digital products, recurring revenue models, franchising opportunities, licensing agreements, or international expansion strategies. Investors are attracted to businesses that can grow without requiring a proportional increase in resources. Present a clear roadmap that outlines future milestones. These milestones may include product improvements, geographic expansion, hiring plans, customer acquisition targets, strategic partnerships, operational enhancements, manufacturing scale-up, or entry into new industries. Risk management should also be addressed honestly. Every business faces risks related to competition, regulations, technology, customer behavior, economic conditions, supply chains, cybersecurity, or operational challenges. Explain how you identify, monitor, and reduce these risks. Transparency builds credibility. Investors generally understand that risks exist, but they want to know that founders are aware of them and have plans in place. Include information about industry trends that support future growth. Show how changing consumer preferences, technological innovation, demographic shifts, sustainability initiatives, digital transformation, or market inefficiencies create opportunities for your company. A well-developed growth strategy demonstrates that your business is not simply focused on survival. Instead, it shows a clear vision for expansion, market leadership, and long-term value creation. One of the most closely examined sections of any pitch deck is the team and financial projections section. Investors often say they invest in people first and ideas second, because even the strongest business concept can fail without capable leadership. Begin by introducing the founding team and explaining why they are uniquely qualified to build the company. Highlight relevant industry experience, technical expertise, leadership achievements, entrepreneurial success, sales experience, operational knowledge, product development skills, financial management capabilities, or specialized education. Focus on achievements that directly relate to the business rather than listing every career accomplishment. Explain how each team member contributes to the company's success. Investors look for balanced teams that can handle product development, marketing, sales, operations, finance, customer service, and strategic planning. If there are advisors, mentors, board members, or strategic partners involved, explain their value and how they support the business. Strong advisors can increase investor confidence by providing expertise, industry connections, and guidance. After presenting the team, transition into financial projections. Financial forecasts should be realistic, logical, and supported by assumptions. Start with revenue projections and explain how those numbers are generated. Discuss expected customer growth, average transaction values, subscription renewals, sales conversion rates, pricing assumptions, and expansion plans. Investors want to understand the reasoning behind your forecasts rather than simply seeing optimistic numbers. Present projected expenses, including salaries, marketing costs, technology expenses, office costs, operational expenses, manufacturing costs, logistics expenses, customer support costs, legal fees, insurance, and administrative costs. Explain how profitability improves as the company grows. Show expected gross margins, operating margins, and cash flow improvements over time. Cash flow is especially important because many businesses fail due to cash shortages rather than lack of demand. Discuss key financial metrics such as break-even points, return on investment, customer acquisition costs, customer lifetime value, recurring revenue percentages, average revenue per customer, and profitability timelines. Investors appreciate founders who understand financial management deeply. Keep projections ambitious but believable. Unrealistic forecasts can damage credibility immediately. A strong financial section demonstrates planning, discipline, business understanding, and the ability to transform growth opportunities into sustainable financial results. The final section of a pitch deck is where everything comes together, and where many founders either strengthen or weaken their entire presentation. A powerful conclusion should reinforce the opportunity, summarize the business case, and create excitement about the future. Begin by reminding investors of the problem, the solution, the market opportunity, the traction achieved, the business model, and the growth potential. The goal is not to introduce new information, but to strengthen the most important points already discussed. Clearly explain your funding request. State how much capital you are seeking, and provide a detailed breakdown of how the funds will be used. Investors want to know exactly where their money will go. Categories may include product development, technology infrastructure, hiring, sales expansion, marketing campaigns, inventory purchases, manufacturing capacity, research and development, market expansion, customer acquisition, regulatory compliance, working capital, or operational improvements. Explain what specific milestones the investment will help achieve. For example, funding may support reaching profitability, expanding into additional markets, launching new products, increasing production capacity, growing the customer base, improving retention rates, or building strategic partnerships. Investors are more likely to invest when they can clearly see the expected outcomes of their capital. It is also valuable to explain your long-term vision. Describe where you see the company in the future and how the business could evolve over time. Discuss opportunities for innovation, expansion, diversification, market leadership, and sustainable competitive advantages. During the presentation itself, maintain confidence, energy, and professionalism. Speak clearly, control your pacing, and focus on communicating value rather than simply reading slides. Prepare for questions regarding competition, financial projections, customer acquisition, operational risks, scalability, valuation, profitability, and market conditions. Strong founders view questions as opportunities to demonstrate expertise rather than challenges to overcome. Always end with a memorable closing statement that reinforces the company's mission and growth potential. A successful pitch deck is not merely a collection of slides. It is a persuasive business story supported by data, strategy, execution, financial understanding, market opportunity, customer demand, and a compelling vision that inspires confidence in the future. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.